Question 1. Title insurance policies. An owner's title insurance policy and a lender's title insurance policy both provide coverage in a real estate transaction. Which of the following statements accurately reflects the difference between these two types of policies? A. An owner's policy covers only the lender's interest in the property, while a lender's policy covers the owner's interest. B. An owner's policy is transferable to subsequent owners, while a lender's policy is not. C. A lender's policy covers the owner's interest in the property, while an owner's policy primarily covers the lender's interest. D. An owner's policy provides coverage for claims against the title not covered by a lender's policy, but a lender's policy only covers the amount of the mortgage loan. Answer: D. An owner's policy provides coverage for claims against the title not covered by a lender's policy, but a lender's policy only covers the amount of the mortgage loan. Explanation: an owner's policy and a lender's policy serve different purposes in a real estate transaction. An owner's title insurance policy protects the property owner's interests against title defects that were not identified before the purchase, such as fraud or undisclosed heirs, and is not transferable to new owners. Conversely, a lender's policy is designed to protect the lender's interest in the property, and it only covers the amount of the mortgage loan. The owner's policy generally provides broader protection compared to the lender's policy, which is limited to the amount of the loan. Question 2. Real property law and legal concepts. In the context of title insurance, which of the following is an example of an involuntary lien? A. A mortgage lien. B. A mechanic's lien. C. A judgment lien. D. A lien for unpaid property taxes. Answer: D. A lien for unpaid property taxes. Explanation: involuntary liens are those that are imposed on a property without the consent of the property owner. A lien for unpaid property taxes is an involuntary lien because it is imposed by the government due to non-payment of taxes. A mechanic's lien can also be involuntary if filed by a contractor for unpaid work, while a judgment lien is a court-imposed lien resulting from a legal judgment. A mortgage lien, on the other hand, is a voluntary lien because it is agreed upon by the property owner as part of securing a loan. Question 3. Scenario-based question on title searches and examinations. Mr. Smith is purchasing a property and is in the process of finalizing his title insurance. During the title search, the title examiner discovers an unrecorded deed from 15 years ago that transfers ownership from a previous owner to a current owner who is not listed in the current chain of title. What should Mr. Smith do to address this issue? A. Proceed with the purchase without concern, as unrecorded deeds do not affect current ownership. B. Request a title commitment from the insurer that includes the unrecorded deed and proceed with the purchase. C. Seek a quiet title action to clear any potential issues related to the unrecorded deed before proceeding with the purchase. D. Negotiate with the seller to include an indemnity agreement in the sale contract to cover potential issues arising from the unrecorded deed. Answer: C. Seek a quiet title action to clear any potential issues related to the unrecorded deed before proceeding with the purchase. Explanation: in the case of an unrecorded deed that affects the chain of title, it is crucial to address this potential defect before finalizing the purchase. A quiet title action is a legal proceeding used to resolve disputes over the ownership of property and to clear any clouds on the title, such as unrecorded deeds. This action ensures that the title is free of disputes and defects, providing clear ownership before Mr. Smith completes the purchase. Simply requesting a title commitment or negotiating an indemnity agreement does not resolve the underlying issue of the unrecorded deed affecting the title's integrity. Question 4. Title insurance regulations and compliance. Under the Real Estate Settlement Procedures Act, RISPAM, which of the following practices is prohibited for title insurance providers? A. Offering a discount on title insurance premiums to induce referrals from real estate professionals. B. Providing a written estimate of title insurance costs to a prospective borrower. C. Engaging in a business relationship with lenders and sharing information necessary for closing. D. Charging for title services and providing a good faith estimate of these charges in the initial disclosure. Answer: A. Offering a discount on title insurance premiums to induce referrals from real estate professionals. Explanation: SPA regulates practices related to real estate transactions, including the prohibition of giving or receiving kickbacks or referral fees that could influence a settlement service provider's actions. Offering discounts to induce referrals from real estate professionals is considered a kickback under SPA and is therefore prohibited. Providing estimates and engaging in business relationships is permissible as long as it adheres to transparency and disclosure requirements. Question 5. Title insurance underwriting. When assessing risk in title insurance underwriting for a commercial property, which factor is least likely to influence the underwriting decision? A. The presence of existing liens and encumbrances on the property. B. The potential for future environmental contamination. C. The historical use of the property and its impact on title. D. The property's architectural style and aesthetic appeal. Answer: D. The property's architectural style and aesthetic appeal. Explanation: title insurance underwriting focuses on factors that impact the legal and financial aspects of property ownership, such as existing liens, potential environmental risks, and historical use of the property. Architectural style and aesthetic appeal are not relevant to the underwriting process, which centers on evaluating risks and ensuring clear title. Question 6. Title searches and examinations. In the title examination process, which of the following is a key component in identifying and addressing potential title defects? A. Verifying the seller's financial statements. B. Conducting a physical inspection of the property. C. Reviewing the chain of title for breaks or clouds. D. Assessing the property's market value through appraisal. Answer: C. Reviewing the chain of title for breaks or clouds. Explanation: the chain of title is a critical element in title examination. It involves reviewing the history of property ownership to identify any breaks or clouds that may affect the title's validity. Physical inspections, financial statements, and appraisals are important for other aspects of property transactions but do not directly address title defects. Question 7. Title insurance as risk management. How does title insurance serve as a risk management tool for property owners? A. By guaranteeing against any future loss in property value. B. By covering legal expenses for defending against all potential property disputes. C. By protecting against losses resulting from defects in title that were not identified before the purchase. D. By ensuring that the property's zoning complies with current land use regulations. Answer: C. By protecting against losses resulting from defects in title that were not identified before the purchase. Explanation: title insurance protects property owners from financial loss due to defects in the title that were not discovered during the title search and examination process. This includes issues such as undisclosed errors, fraud, or errors in public records. Title insurance does not cover future loss in property value, legal expenses for all disputes, or zoning compliance. Question 8. Legal definitions of real property. Which of the following best defines fee simple absolute in real property law? A. Ownership with the right to use the property for a specific period after which it reverts to the original grantor. B. Ownership with the condition that the property must be used for a particular purpose, with reversion if the condition is not met. C. The highest form of ownership interest in real property with complete and unrestricted rights. D. A form of ownership shared equally among multiple parties, each having a right to possession and transfer. Answer: C. The highest form of ownership interest in real property with complete and unrestricted rights. Explanation: fee simple absolute is the most complete form of property ownership, providing the owner with unrestricted rights to use, transfer, and dispose of the property. This form of ownership is not subject to conditions or limitations and does not revert to a previous owner. The other definitions describe different forms of property interests, such as life estates or conditional estates. Question 9. Title commitments. What is the primary purpose of Schedule B in a title commitment? A. To list a legal description of the property and parties involved in the transaction. B. To specify the exceptions and exclusions from title insurance coverage. C. To outline the requirements for issuing the title insurance policy. D. To provide a summary of the title search findings and defects identified. Answer: B. To specify the exceptions and exclusions from title insurance coverage. Explanation: Schedule B of a title commitment details the exceptions and exclusions from the coverage provided by the title insurance policy. It outlines what is not covered by the policy, including specific conditions, encumbrances, or claims that could affect the title. Schedule A contains the legal description and parties involved, while Schedule C outlines requirements for issuing the policy. Question 10. Adverse possession and prescription rights. Which of the following is a requirement for a claim of adverse possession to be valid? A. The claimant must have paid property taxes on the property for a minimum of 5 years. B. The possession must be open, continuous, and hostile to the interests of the true owner. C. The property must be occupied only for personal use and not for commercial purposes. D. The claimant must have received written permission from the property owner to use the land. Answer: B. The possession must be open, continuous, and hostile to the interests of the true owner. Explanation. Adverse possession requires that the claimant's use of the property be open and obvious, continuous, for a statutory period, and hostile to the interests of the true owner. This means the possession must occur without permission from the owner and be evident enough for the owner to notice. Paying property taxes or using the land for specific purposes is not a requirement for adverse possession. Question 11. Title insurance policies. What is the primary difference between a standard coverage title insurance policy and an extended coverage policy? A. Standard coverage policies cover only known title defects, while extended coverage policies cover unknown risks discovered after purchase. B. Extended coverage policies include additional protections against certain risks not covered by standard policies, such as zoning issues and certain types of forgery. C. Standard coverage policies provide coverage for environmental hazards, whereas extended coverage policies do not. D. Extended coverage policies are transferable to new owners, while standard coverage policies are not. Answer. B. Extended coverage policies include additional protections against certain risks not covered by standard policies, such as zoning issues and certain types of forgery. Explanation. Extended coverage title insurance policies offer broader protection than standard policies. They typically include coverage for risks such as zoning issues, certain types of forgery, and some other defects that are not covered under standard policies. Standard policies generally provide coverage for more common risks and defects identified before the purchase but may not cover these additional risks. Question 12. Title insurance underwriting. When underwriting a title insurance policy for a residential property, which of the following factors is considered most critical? A. The current market value of the property. B. The physical condition of the property structures. C. The presence of any recorded or unrecorded liens or encumbrances. D. The potential for future developments in the surrounding area. Answer. C. The presence of any recorded or unrecorded liens or encumbrances. Explanation. In title insurance underwriting, the presence of recorded or unrecorded liens or encumbrances is critical because these can affect the title's validity and the insured's ownership rights. The physical condition, market value, and future developments are important for other aspects of property transactions but do not directly impact title insurance risk assessment. Question 13. Title searches and examinations. If a title examiner discovers a break in the chain of title due to an unrecorded deed, what is the most appropriate action to resolve this issue before closing? A. Ignore the unrecorded deed if it appears to have no impact on the current ownership. B. Have the seller sign an affidavit stating that the unrecorded deed does not affect the title. C. Request that the seller record the unrecorded deed and obtain a corrective deed if necessary. D. Proceed with the closing and add an exception for the unrecorded deed in the title insurance policy. Answer. C. Request that the seller record the unrecorded deed and obtain a corrective deed if necessary. Explanation. To resolve a break in the chain of title due to an unrecorded deed, the appropriate action is to ensure that the deed is recorded properly and obtain a corrective deed if needed. This ensures that the title is clear and reflects the complete history of ownership. Simply ignoring the issue or adding an exception does not address the underlying problem. Question 14. Real property law and legal concepts. In real property law, which type of ownership allows for the property to be divided among co-owners with each having a distinct share but does not include the right of survivorship? A. Joint tenancy. B. Fee simple absolute. C. Tenancy in common. D. Tenancy by the entirety. Answer. C. Tenancy in common. Explanation. Tenancy in common allows multiple owners to have distinct, divisible shares of the property without the right of survivorship. This means that each owner can transfer their share independently, and upon their death, their share is inherited by their heirs. Joint tenancy and tenancy by the entirety both include the right of survivorship, and fee simple absolute is a single ownership interest without co-ownership implications. Question 15. Title insurance regulations and compliance. According to the Dodd-Frank Act, which of the following requirements is imposed on title insurance companies? A. Title insurance companies must provide a detailed description of their claims history to regulators. B. Title insurance companies must ensure that all settlement service providers involved in a transaction are affiliated. C. Title insurance companies must disclose any affiliated business arrangements to consumers. D. Title insurance companies must offer standardized title insurance policies across all states. Answer. C. Title insurance companies must disclose any affiliated business arrangements to consumers. Explanation. The The Dodd-Frank Act requires title insurance companies to disclose any affiliated business arrangements to consumers to prevent conflicts of interest and ensure transparency in real estate transactions. This disclosure helps consumers understand any potential biases or financial incentives affecting the recommendations they receive. Question 16. Title commitments. In a title commitment, what is the purpose of Schedule C? A. To outline the exceptions to coverage, including specific encumbrances and claims. B. To list the legal description of the property and the names of the parties involved. C. To detail the requirements that must be met before the title policy can be issued. D. To summarize the title search findings and any identified defects. Answer. C. To detail the requirements that must be met before the title policy can be issued. Explanation. Schedule C of the title commitment specifies the conditions and requirements that must be fulfilled before the title insurance policy can be issued. This includes tasks such as obtaining necessary documents, clearing any title defects, and satisfying any other pre-closing requirements. Question 17. Adverse possession and prescription rights. Which of the following is NOT typically a requirement for a successful adverse possession claim? A. Continuous and uninterrupted possession for the statutory period. B. The claimant must have paid property taxes during the period of possession. C. The possession must be open and notorious, making it obvious to the true owner. D. The claimant must have written permission from the property owner to use the land. Answer. D. The claimant must have written permission from the property owner to use the land. Explanation. Adverse possession requires that the claimant's use of the property be continuous, open, and notorious without permission from the true owner. A written permission would negate the claim of adverse possession, as it implies that the use was not hostile. Paying property taxes is often required but varies by jurisdiction. Question 18. Title insurance as risk management. Which of the following is a typical exclusion from coverage in a standard title insurance policy? A. Claims based on errors in the public record. B. Claims arising from zoning violations or restrictions. C. Claims related to undisclosed errors or fraudulent transfers. D. Claims related to property taxes or assessments. Answer. B. Claims arising from zoning violations or restrictions. Explanation. Standard title insurance policies typically exclude coverage for issues related to zoning violations or restrictions, as these are considered outside the scope of title defects. Coverage often includes protection against claims based on errors in public records, undisclosed errors, and fraudulent transfers, but not zoning issues. Question 19. Title searches and examinations. When preparing an abstract of title, what is the primary purpose of this document? A. To provide a detailed analysis of the property's market value and potential investment return. B. To summarize the history of property ownership and any recorded encumbrances or defects. C. To outline the physical characteristics and boundaries of the property. D. To list the names and contact information of all parties involved in the transaction. Answer. B. To summarize the history of property ownership and any recorded encumbrances or defects. Explanation. An abstract of title provides a summary of the property's history, including previous ownership and any recorded encumbrances or defects. It does not focus on market value, physical characteristics, or contact information for transaction parties. Question 20. Closing and settlement procedures. What is the role of a closing protection layer, CPL, in a real estate transaction? A. To guarantee the accuracy of the closing statement and disbursement of funds. B. To provide coverage for the title insurance company against errors or fraud by the closing agent. C. To disclose any potential conflicts of interest between the title company and other parties. D. To ensure that all property inspections and appraisals are completed before closing. Answer. B. To provide coverage for the title insurance company against errors or fraud by the closing agent. Explanation. A closing protection letter, CPL, provides coverage for the title insurance company against errors or fraud committed by the closing agent. It is designed to protect the title insurer from financial loss resulting from mishandling of funds or other issues that occur during the closing process. Question 21. Title insurance regulations and compliance. Under the Real Estate Settlement Procedures Act, RISPA, which of the following is true regarding the disclosure of affiliated business arrangements? A. Affiliated business arrangements do not need to be disclosed if they involve only title insurance services. B. Disclosure of affiliated business arrangements is required only if the parties involved are real estate agents. C. Title insurance companies must provide A written disclosure of affiliated business arrangements to consumers if there is an ownership interest in the settlement services. D. Disclosure of affiliated business arrangements is optional and only required if requested by the consumer. Answer: C. Title insurance companies must provide a written disclosure of affiliated business arrangements to consumers if there is an ownership interest in the settlement services. Explanation: RE SPA requires that any affiliated business arrangements where there is an ownership interest in the settlement services be disclosed to the consumer. This ensures transparency and prevents conflicts of interest by informing consumers about the relationships between parties involved in their transaction. Question 22. Title insurance underwriting. In the underwriting process for a commercial property, which of the following factors is least likely to impact the title insurance policy? A. The presence of environmental hazards on the property. B. The historical land use and zoning regulations. C. The aesthetic condition of the properties, buildings and structures. D. The current and past legal disputes involving the property. Answer: C. The aesthetic condition of the properties, buildings and structures. Explanation: the aesthetic condition of the properties, buildings and structures does not typically impact the title insurance policy. Instead, factors such as environmental hazards, historical land use, zoning regulations, and legal disputes are crucial for underwriting as they can affect the title's validity and the insurer's risk. Question 23. Title searches and examinations. What is the main purpose of conducting a title search before closing on a property? A. To assess the current market value of the property and its potential for future appreciation. B. To identify and resolve any title defects or encumbrances that could affect the property's ownership. C. To verify the physical condition of the property and its compliance with building codes. D. To ensure that all real estate taxes and assessments have been paid by the seller. Answer: B. To identify and resolve any title defects or encumbrances that could affect the property's ownership. Explanation: the main purpose of a title search is to identify and address any title defects or encumbrances that might affect the property's ownership. This includes issues like liens, claims, or gaps in the ownership history, which need to be resolved before the closing process to ensure clear title. Question 24. Title insurance policies. Which of the following endorsements is typically used to provide additional coverage for zoning issues in a title insurance policy? A. ALTA 4. Condominium endorsement. B. ALTA 5. Zoning endorsement. C. ALTA 6. Variable rate endorsement. D. ALTA 7. Environmental endorsement. Answer: B. ALTA 5. Zoning endorsement. Explanation: the ALTA 5 zoning endorsement provides additional coverage for zoning issues that may affect the use or value of the property. This endorsement helps address risks related to zoning violations or restrictions not covered by the standard title insurance policy. Question 25. Closing and settlement procedures. Which document provides a detailed account of the disbursement of funds and financial transactions related to a real estate closing? A. Closing protection letter (CPL). B. Title commitment. C. HUD-1 settlement statement. D. Title abstract. Answer: C. HUD-1 settlement statement. Explanation: the HUD-1 settlement statement provides a detailed account of the disbursement of funds and financial transactions involved in a real estate closing. It includes a breakdown of all charges, credits, and payments made during the settlement process. Question 26. Adverse possession and prescription rights. Which of the following is NOT a required condition for a successful adverse possession claim? A. Possession must be hostile and without permission of the true owner. B. Possession must be continuous and uninterrupted for the statutory period. C. Possession must be exclusive, with the claimant having sole use of the property. D. Possession must be documented with a written lease agreement between the claimant and the true owner. Answer: D. Possession must be documented with a written lease agreement between the claimant and the true owner. Explanation: adverse possession requires that the possession be hostile, continuous, and exclusive, but it does not require a written lease agreement. Adverse possession is based on actual open and continuous use of the property without the true owner's permission. Question 27. Title insurance as risk management. Which of the following scenarios would likely result in a claim under an extended coverage title insurance policy? A. A boundary dispute involving a neighbor over a recently surveyed property line. B. A claim based on an error in the title search performed before closing. C. A forgery of a prior deed discovered after closing. D. A defect in the property's structural integrity. Answer: C. A forgery of a prior deed discovered after closing. Explanation: extended coverage title insurance policies are designed to address risks such as forgery of prior deeds, which may not be covered by standard policies. Claims related to boundary disputes, as in the title search, or structural defects would not typically be covered under title insurance. Question 28. Title commitments. What does Schedule B of a title commitment typically include? A. The legal description of the property and parties involved. B. Exceptions and exclusions from coverage, including specific encumbrances and claims. C. Requirements to issue the title policy and pre-closing conditions. D. A summary of the title search findings and identified defects. Answer: B. Exceptions and exclusions from coverage, including specific encumbrances and claims. Explanation: Schedule B of a title commitment outlines the exceptions and exclusions from coverage, detailing specific encumbrances, claims, or issues that are not covered by the title insurance policy. This helps the buyer understand what risks may affect their coverage. Question 29. Title insurance regulations and compliance. According to the Dodd-Frank Act, what is one requirement placed on title insurance companies regarding consumer disclosures? A. Title insurance companies must provide a detailed risk assessment report to consumers. B. Title insurance companies must disclose any affiliated business arrangements that could affect the settlement process. C. Title insurance companies must offer a standardized policy across all states. D. Title insurance companies must ensure that all settlement service providers are licensed in the same state. Answer: B. Title insurance companies must disclose any affiliated business arrangements that could affect the settlement process. Explanation: the Dodd-Frank Act mandates that title insurance companies disclose any affiliated business arrangements that could impact the settlement process. This requirement aims to enhance transparency and prevent conflicts of interest. Question 30. Title searches and examinations. When preparing an abstract of title, which of the following information is most critical to include? A. The property's market value and potential for future development. B. The history of ownership and any recorded encumbrances or defects. C. The names and contact details of the real estate agents involved in the transaction. D. The current condition of the property's buildings and structures. Answer: B. The history of ownership and any recorded encumbrances or defects. Explanation: an abstract of title is a summary of the property's ownership history and any recorded encumbrances or defects. This information is crucial for understanding potential title issues and ensuring a clear transfer of ownership.